Hello and welcome to Shoot the Shit with Shaina McAndrews. Today I have Corey G here from CrossCountry Mortgage. Corey, say hello.
Hi, everybody.
Yeah, Corey, I've known you for several years now. You are a phenomenal loan officer, and I appreciate your professionalism, your creative strategies when we really need them to get buyers into homes. And you've been able to help a lot of people that I think other lenders, they weren't able to, but also to guide people in a way that, especially when they're looking to build wealth and it's not just one purchase, but they want to move up in a few years into a bigger house, things like that. And you really address that with our clients, which is great. So
Yeah, thank
just a
you.
big shout out to you there.
I appreciate that. Thank you. That's a big compliment.
Yeah. Do you want to kind of introduce a little bit about you and your 30-second elevator pitch?
Sure. Well, I appreciate that. Well, first and foremost, as you mentioned, our focus here is to make sure that our clients feel comfortable, they feel safe, and they're ready to take the next step.
Yeah.
Homeownership, in my opinion, is a big deal. I mean, it's up there with one of the, top 4 or 5 things people might do in their lifetime. So I'm really excited to be a part of that process with them. And there's a lot of gratification and fulfillment that we get from helping people achieve that goal. Our whole process is designed to be able to allow our clients to share some of their concerns, their fears, and also what they're excited about. Oftentimes when it comes to homeownership, it's a big deal. And it's a big purchase, and there's a lot involved. So we want to make sure that we make it easy. I think that when it comes down to creative financing, as you mentioned, everybody's been in this more than 20 years, and we're still learning. We still run into situations that we learn every day, and I'm sure you do on your side as well. We have to be nimble. There's not a one size fits all approach for us.
Absolutely. And I will vouch for your team. I think part of being successful in any business is surrounding yourself with people who are fantastic, and you have done that. I love Blakely on your team. You've got Matt Bass, he's great. And Kristen, you have the best processor. She just knows things. She's like the Yoda of loans and what we need for the processing side of it. And I know you have other team members too. Those are the primary ones that I work with, and you got Alyssa too now. I think all of it really helps with the client journey, because sometimes buying a home can be very emotional. Sometimes it's very logical. It depends on the person. And you guys are able to kind of handle anyone in their walk of life and get them to the closing table. When you get a pre-approval and I see a pre-approval from you and I'm on the listing side, I'm like, that one's going to go through. So it's not going to mess around.
Yeah, I appreciate that. And you're right. I think that surrounding yourself with the right people is the key ingredient to be successful in really whatever you do. And the one thing that we're always a work in progress. We're always trying to get better, all of us. And what we've learned through our past couple decades is we can't do everything. Yeah. There's things that we're good at. There's things that we're not good at. And I've been fortunate enough to align people where they can kind of live in their genius and use their strengths. And we're not doing a ton of overlap. And that creates margin for us so we can focus on the things that matter most. For example, you brought up Alyssa. One of the things that we need to, as an industry, do better at is serve our clients throughout their lifetime, not just up until the closing. And we all know that that's a big part of what we do, what we want to do, or what we intend to do. But there's times where we get really busy and that becomes kind of an afterthought. As much as we hope that it never does, that's the way business is. So we really wanted to structure our team so we have each person focusing on the key areas of the buyer journey. And, that allows me to kind of focus on making sure the business is moving without feeling like anything's getting left behind.
Yeah, I love that. And I will give a little bit of a shout out to something else that you have been doing, which is these mastermind program with some of the agents that you work with. It's been so nice that you've opened that door, and I love attending. It's once a month. You have it at your office, and you always, when I'm able to make it, you make sure that there's a vegetarian option for me for lunch. I really like that.
Well, Matt on our team does a great job with that.
Yeah, Matt does a great job with that. I think I'm the only vegetarian he knows. He's like, oh yeah, her. So, but no, those masterminds are so fantastic. And, there's always a good takeaway, a good nugget. And I encourage, other agents to attend too.
Thank you.
Because it's not about the lending side or real estate. It's about being an entrepreneur, I think, is really the heart of the mastermind. And being the best entrepreneur that you can be, because that's what we all are at the end of the day. That's why, like, clients, it's really important who you work with, because I don't have to show up to work. I work for myself. Yeah. I show up because I love what I do. I'm passionate about it. And I want to do the best for my clients. So not everyone feels that way in real estate.
Well, there's a reason, Shaina, why you are who you are.
Oh,
and
yeah.
why your clients love you. So I've actually I saw a post on Facebook the other day. I think kind of a little bit of a jab, but not a jab at you, but just a jab to the industry in general. It's like, hey, we were trying to go buy your house, but we can't get the real estate agent to even pick up the phone, let alone all of the other things that you do with your clients to stand out, to really make them feel, as we talked about earlier, comfortable and confident and safe. This is a big emotional roller coaster that people are about to embrace when they decide that they want to go buy a home.
Yeah. Yeah. It's very true. Do you have any crazy mortgage stories?
I do.
Anything? Yeah.
Plenty of them.
I'm
Without
sure.
getting too much into detail, I think that the ones that cause the most stress for me as a lender is when there's a whole chain reaction event happening. So our clients selling a house, they need that money to buy their next house. The client that they're buying a house from needs that money to buy their next house. And all these things have to come together. And there's a lot of people involved to make sure that this thing is orchestrated in general, both on the lending side. There's 8 or 9 people that are involved in a loan file from beginning to end. Then there's all the people involved in the title side, the real estate agents, and all of the different vendors associated with the transaction. And they all have to come together in unison. And at the end of the day, they're all depending on the money to be there, which is, my responsibility to make sure it happens. So I've had situations where we've had multiple events that can't happen unless our event happens. And then on top of that, clients sometimes do funny things. So, we had a client that lost his job in the middle of one of these multi-level transactions because he fell asleep at work. And
No.
I asked him what happened. He said he was trying to work extra hours to try to make sure he was comfortable. He didn't need it from a qualification standpoint, but he needed it for his own peace of mind. And I guess he just did too much. So then we were in a position where at the final hour, having to really get creative. We found, in that case, a co-signer, and they were willing to co-sign, but obviously changed the loan program, the terms, and all that other kind of stuff. So there was a lot of stress involved, a lot at stake. And at the end of the day, we wanted to make sure that we kind of take that on ourselves. So, even some of the agents involved, especially in the downline, maybe not even had no idea what we were going through to make sure that was delivered on time. But at the end of the day, that one in particular got done. And we have a lot of stories like that, but those are the ones that are the crazier ones.
You and I alone have a lot of stories like that. I remember I had a client who she financed toilet paper before closing. And I see your eyes are like, what?
Yeah.
And it was some house cleaning website, and she didn't realize that to get the discount, which was a good discount.
Yeah.
But she had to open up a line of credit with this house supply
So
cleaning
that
supply
had to have
place.
been during COVID when people were panic buying toilet paper. Like nobody ever finances toilet paper.
I will tell you, it was before COVID.
Okay.
And she saved $200 and it almost killed the deal. So,
oh my goodness.
Whenever you put in your social security number, just for general audience understanding, you're probably getting your credit run. Don't do it when you're under contract. And she's the nicest person, but we saved it. It was incredible. But yeah, there's a lot we try to avoid those by educating our clients ahead of time and going through that. And that's why working with you, I know that my clients are in good hands and you've already had that conversation with them.
Yeah, for anybody looking to buy a house, the biggest piece of advice I can give you is get ahead of it early, have a conversation with your agent and your lender, have a plan. And before you do anything radical, check with your lender to make sure that you're not going to have problems. The harder ones happen when, the client doesn't want to go through the pre-approval process. They might feel it's too invasive, but yet they want to make an offer, they go under contract. If I have a conversation for the first time with somebody and they're already under contract, we've already diminished 80% of the value that I can bring to the table for them. So early is the best thing.
Yeah. Even if someone's looking to purchase a house and they're a year out, let's say, and they're like, I'm not ready yet. Let's have a conversation. Let's get the conversation started, because some things, maybe your credit's 620, or there's some things on your credit that's holding you back from purchasing the kind of house that you want to buy. With Corey and my guidance, we can guide you to, hey, this is kind of what you're looking for. It should be around here next year. Let's talk about how you can get there. Let's cut out some of the debt. Let's not pay down the credit card, but put that money towards something else. And people are like, shouldn't I just pay it off? Yeah, that's not always the answer.
Yeah.
That's Corey.
I've had people tell me,
the whole thing stuck.
I've had people tell me that they're not really ready to do the pre-approval yet because they want to fix some stuff. And I'm like, hey, wait a minute. Let me help you decide what to fix first, because some things might move the needle more than others. So,
yes.
Early is better. And on the flip side of that, Shaina, I've had a lot of situations where people have come to me and said, hey, we're just getting started. we want to buy next year or the year after or whatever the case might be, because they feel they have limitations. And then after we explore it all, we realize, hey, you're ready to buy now. I think it's important to work with the right people that can really understand what your big goals are without tunnel vision, look at it from a higher elevation, and just make sure that we're putting all the right steps together for you.
Absolutely. And one of the things that we hear a lot from clients is they talk about rates and they're like, I heard XYZ in the news. And we had to go back and we're like, okay, let's take a breath. The news isn't always the best way to watch the market and what's happening, because if so, you're going to think, oh, the rates are crazy high or crazy low this week. They have been kind of steady overall, but we've had some dips, we've had some highs, and it's hard. You can't time the market. And I think that's the biggest piece of advice we can give to our clients. You cannot time the market. You can time your lock-in when you're under contract, but if you're not under contract to purchase a house, you have no chance of locking in a rate. What does it matter? And if you're shopping a lender, you better ask within the same 5 minutes, and they better produce the same loan estimate within 5 minutes, because
That's
it's
right.
that drastic. But what kind of advice do you have on that for buyers?
Yeah. So first and foremost, realize that as lenders, we don't control what happens with rates, right? Then the news, as you mentioned, is always a look back. It can only tell us what happened. And then there's a lag time. So for example, low rates or high rates, it creates activity, creates clickbait for advertisers. So if they see something that came out, say 2 weeks ago, they're putting it out there as a story today. But by the time that story is published, the story's really changed. The market does fluctuate on a regular basis, and there's so many things that can drive the market. The bottom line is it's all supply and demand. When there's buyers for mortgage-backed security bonds, rates go down. When there's not buyers for it, rates go up. Why are there buyers for it? Listen, right now we're seeing people move money out of the stock market and into bonds. That's good for mortgages. I think that might relate to the tariffs and so forth that are being pushed out there. Inflation is a big thing to track as well. I guess the easiest thing that a consumer can do is take a look at the 10-year Treasury. 10-year Treasury has been a very good guide as to what's going on with mortgage rates. Now, it's not an exact science, but when the 10 years going up, mortgage rates are going up. When the 10 years going down, mortgage rates go down. Right now, rates are in a good spot. We're seeing, in the past 2 years, we've seen only 3 separate occasions where rates are where they are today. And in each of those occasions, they haven't lasted that long. What does that mean for the future? I have no idea. And I don't think anybody really does. The best thing we can say is that the reports that we read, the signs that we read, the experts that are out there, they are all saying the same thing, that we should see rates come down. Now, what's low? Low, I thought before, was 5%, and then they went to the 4s, and then they went to the 3s, and then 2s, and then they went up to the 7s and 8s. I don't know. I think we'll settle into the mid 5s at some point next year is what my gut feeling tells me.
Yeah. And even if that is what your gut feeling is telling you, and what, I'm hearing from other, from economists and other people around at the top of their career saying the same thing, I would not hesitate to buy that house, because when the rates go down to anywhere around between 5 and 6, it's going to increase again. We're going to see another huge increase in sales prices here, because it's the greater Philadelphia area. There's a lot of demand. Yes. I haven't seen prices go down really. I've seen some times in the market where it equals out, it evens out. But that's over the span of a couple months. It's not year to year. So if you buy a house now with a higher rate, that's great, because it's going to cost more later. Refinance it when the rates go down.
100%. If I came to you, Shaina, back in the beginning of 2023, for example, and we looked at a house, just call it a 3-bedroom, 2-bath, standard single-family home here in the suburbs, and I decided not to buy because I want rates to go down first. And I fast forward to today, rates are in the exact same spot, but how much more is that house worth today?
Exactly. And that could be anywhere between 3% to 17%, depending on which neighborhood we're looking at. That's a huge change.
So I've seen some go up even upwards of $50,000 to $100,000 more.
Exactly.
So even if rates were lower today, if I spent $100,000 more for the house, and let's say rates were at 5.75%, I don't know if my payment's really that much better, and I've given up $100,000 in equity.
Yeah. I think that there is a residual concern of buying, residual from 2008, where people are concerned about buying a house at the top of the market. What would you say to those buyers?
I started my business in 2006, which was probably the worst time to start a mortgage company. I lived through the '08 market crash, and we saw some decline, but really the major impact then, there was a massive wave of foreclosures because lenders were doing 100% financing with risky loan products. And what we've seen with this last wave is buyers going over ask but appraisals were slowly catching up, meaning that consumers were putting more money down. So most people have, cash invested into these homes. They're not going to walk away from it. And then the other thing is inventory is tight right now because people that have the low, COVID interest rates, they're not wanting to leave. So, we're not going to see the wave of foreclosures that we saw then.
I agree. And if someone doesn't understand the 2008, why that all happened, I don't like movies for educational purposes, but The Big Short was really good. I think they did a great job explaining why this happened. And you're watching, you're like, oh my God. And it's true. Like on that, you're financing a fifth house and you had no money and you put zero money down. Like, what is happening?
Yes,
scary stuff.
But there was, they didn't portray the mortgage broker very good in that movies.
No. Okay. Yeah. But now there's so many protections for consumers from that whole incident in the mortgage world.
Yes.
And there's a lot of things to prevent something like that. So I wouldn't really worry. We have our population is growing here in Greater Philadelphia. Yeah. We have low inventory. People want to be here. We have good jobs. So
I tell clients, we're in an area where we might, nothing goes up in a straight line. So I do think we'll see some bumps in the road, but we're not going to see a crash. Mm-hmm. This area is driven by many different economies, education, pharma, medical, old money, new money. And we're also in a part of the country where we can enjoy the beach, we can enjoy the mountains, you can be in the major cities. And we also are away from most of the natural disasters that are causing a lot of the problems. So, I think you're going to see a lot of demand in this area for, forever. I don't see what changes that.
Yeah. And I think about it the same way. And if anyone is looking for a beach house or a Pocono house, I'm here for it. So yeah, my team, we do it all. So what do you think are some of the programs that are helping buyers buy a home with little cash right now? What should they be looking at? And are there options for people who just maybe weren't able to save that much because it's been a tough economy?
That's a great conversation to have. I think that to rely on seller's assist was the kind of go-to strategy years ago. Is pretty much out the door unless you're in a pocket where there's not quite as much demand. So we need to rely on other things such as down payment assistance programs, grants. PHFA, for example, is a great program where they can get you up to 5% of the purchase price on the home. That certainly does help. We have a client closing tomorrow. He's got to bring $40 out of pocket to close.
Amazing.
Just a great way to be able to create a pathway for homeownership. There's some qualifications, of course, to it. And there's some things that you need to discuss with the lender and some of the pros and cons with some of these programs that are out there. But they're not designed to hurt. There's just some things to be aware of.
Yeah, you have to live in the home for 5 years or something before it changes hands. So if you're looking to house hack and use the DPAs, the down payment assistance programs or the grant programs, it's probably not the right way to do it unless you want to pay back that loan if you're not going to live there for that long.
Yeah, correct. So like PHFA, for example, has a 5% sits on there as a silent second. It's forgivable, fully forgivable over a period of time. But if you're refinancing or selling or converting to an investment, they will require a certain amount of that money to be repaid back. So it's great if you need the money to buy the house. It's not necessarily the best to just kind of take free money if you have other means to be able to do it. And you mentioned house hacking. I think that's a great way to look at a pathway into creating wealth through real estate. And the reason why I say that is because if you're going to spend money to rent somewhere, you could probably buy a 3 or 4 unit property with as little as 5% down right now, or even 3.5% down if you can get FHA to qualify, and have other people paying rent. You could also do this in a single family home where if you have maybe roommates paying rent. Now, we don't look at that from a lending side as income, but at least from a cash flow perspective for the buyer, there's ways to be able to help offset their cost of home ownership. And even if it's not the forever type home, over time, that house is going to appreciate in value. Eventually you leave and you have another source of rent coming in. So we can let somebody else fund your retirement for you.
Absolutely. And I'll share a personal story, Corey, because you helped me do this, is we use a special loan product and we were able to put as low as 5% down. I think we ended up putting 10% down in the end. And I was able to qualify as primary occupants, even though I didn't move. And the reason was because I got my dad to move. And so he's going to live in the property for a year, and it's a duplex. And the one side pays the mortgage. So my dad is taken care of for his retirement, which is great because I don't want him to be housing insecure. And I also wanted him to get out of his current house because he wants a different life path. And so encouraging him along there. The best thing is we can do this again in a short while.
It's called the family opportunity mortgage, where, you don't have to be the owner occupant if you have a disabled child, for example, or a parent that can't qualify on their own. You can step in and help qualify as an owner occupied mortgage, even though you're not occupying the house. So it's a great program to be able to leverage.
Yeah. So the best part of that is, if you're doing an investment loan, you're going to have a little bit of a higher rate and you're going to have to put more money down. So that's what the benefits are. So if you have a situation like that, maybe a family member you want to help out, but they can also help you. It can be, a symbiotic relationship. It's a great path forward.
I love the opportunity to be able to do that with the multi-unit as well, because again, I look at it as the parent may not have the means to be able to qualify for the mortgage. So if we can get them into a house and also have additional rents coming in to help offset their housing expense, it actually satisfies what the initial challenge was to begin with.
Yeah. Yeah. And what do you think? Is there anything else for 2025 that home buyers should be having a discussion with about their loan, with the product they're using, with their lender?
Well, I will say anybody that has purchased over the last couple years should be having conversations with their lender, not necessarily about potential to refinance, but there's things that we can do to help you lower your cost of homeownership. For example, we want to make sure you're taking advantage of the homestead with your taxes. We've seen insurance premiums going up laterally without any discussion. So there's an opportunity to shop that around. If you have PMI, there might be an opportunity for you to have PMI removed. So I think in a look back, there's ways that you can save money and you should be in discussions. If you're looking forward, I think the one thing you should really talk to your lender about is, what are your goals? What are your goals now? And what are your long-term goals? What I see is people sometimes automatically assume that I'm going to put 20% down. And when we talk more about their longer-term goals, we realize this is only going to be a 3 to 4 year type home. And then they're going to want to buy their forever home later. It's harder to get that money back out. So we may have a different strategy after we really identify what's most important to the client. So don't be afraid to share with your lender what you're looking to accomplish now, but also in the future. And if your lender's not asking you those questions, it's really going to be on you to kind of think that through. So just be mindful that there's many different ways to be able to finance real estate. And we want to make sure that whatever path you choose is best for you. And then on the other part of that equation, it's very competitive right now, and we're going to have to leverage strategies to make sure you can compete in this market without necessarily paying more money for your house. There's things that we can do to help position your offer in a better way.
Yeah, absolutely. When we have clients working together with a client and coming up with that strategy to be competitive in a very competitive market, and talking with the client, consulting them, letting them know what are they capable of doing. It's very important. Is there something else that clients should be, if maybe they're under contract right now, what's something that they should probably talk to their lender about?
If you locked in the last 2 or 3 months, you should ask your lender if there's a float down option available right now, because rates have improved over the last 30 days or so. I think that's one question. If you're already under contract and you're already submitted, there's not really a whole lot you can do in terms of strategy. But if you're out there looking and you've been pre-approved, and you haven't had your pre-approved updated, perhaps you have more buying power now. Make sure you're asking about any down payment assistance programs that are out there. PHFA, for example, is another great one that people are not necessarily looking at. Sometimes there's even lower rate options available. So just make sure that you have the best financing strategy for your needs.
Yeah. Yeah, PHFA is a fantastic program. And then if for anyone in New Jersey, they also have a first-time homebuyers grant, and that varies too. But, if you can get $10,000, $15,000 for purchasing a home, it's a great way to get started.
The other thing that helps in Jersey, Shaina, is that in Philadelphia, for example, transfer taxes are almost 2.5% on the buyer side. But in Jersey, the buyer doesn't pay that. So if you have less money, you might be able to purchase in Jersey a little bit easier than you could in say, Philadelphia.
Yeah, very true. That's a great point. Now, I want to ask you a couple things.
Sure.
In this little game I like to play is Fact or Crap. So
Okay.
Philadelphia, this is about Philadelphia and the surrounding areas. And you're just going to let me know, is it fact or is it crap? And of course, I hope my microphone is not picking up all the background sound because my cat just decided to be very active right now and is playing
I don't hear
all her toys. Okay, great. She's very distracting. So, and if you've ever read my real estate bio, it does say my cat would like to stay anonymous, so I won't show her. But a Philadelphia bank once gave out home loans to customers based on a handshake and a promise to pay. Fact or crap?
I have to say crap.
It's real. Early
Really?
1900s community banking. Yeah.
Fantastic.
I know. Could you imagine
They went
doing
out of
that
business,
nowadays?
right? They went out of
Well,
business.
they are not around anymore. So it doesn't work that way anymore. All right. The first ever credit card was invented in Philadelphia.
I'll go fact.
This one's crap. But
I'm so
it
bad at
is
this game.
nearby. This one is it was invented in New York City, so not too far away.
Okay.
Yeah.
0 for 2.
Yeah, you'll get this one. The Comcast Tower has a hidden apartment at the top that only executives can stay in.
That sounds like something that Comcast would do. I'm going to go with fact.
It's crap. I
Come
loved
on.
writing that one. I loved writing that one.
Sorry, Comcast.
It seems like something they would do. Look at all these people with a bad service out there. Just kidding. We all, if you have Comcast, you hate Comcast. If you have Verizon, you hate Verizon. It's just how we flow here. In the 1700s, Benjamin Franklin proposed a public fund to help colonists buy homes. Benny Frank.
Let's go fact.
Yes, finally.
Yeah,
What's
finally.
here? So he was ahead of his time. Like in most things, Benjamin Franklin was ahead of his time with ideas, especially about financial lending. So yeah, he did propose a public fund to help colonists buy homes. All right, last one for you, Corey. There's a bank vault in Old City that hasn't been opened in over 100 years because no one knows the combination. Fact or crap?
I'm going to say crap.
It's real.
Oh, man.
And no one's sure what's inside. So I don't know. Why haven't we opened it?
Somebody's got to be able to figure this out.
Yeah. Where's Nicolas Cage when we need him?
Yeah, exactly.
Yeah. All right. And then, Corey, where's your favorite cheesesteak? Can be in the suburbs, can be in Philly.
I'm gonna can I change up a little bit? I'm gonna say the best beef sandwich is definitely at the Ale House in Lafayette Hill.
Yeah, beef sandwich. Yeah, Ale House. Yeah. Oh, that's a fantastic spot.
And by the way, that's my kid's favorite pizza.
Yeah, I don't think I've had pizza there. I'll have to go have one. It. Yeah, and then best pizza for you?
I like Iliano's. Out there in Conshohocken.
Okay, the Conchi.
But I'm not the best with the. I'm sure there's a lot of people that have very strong opinions and some great pizza places, but I'm too lazy to go find them, or too busy, I should say.
Yeah. Okay. Do you have a favorite bar or brewery in the area?
I don't really go out that much anymore to be able to tell you. We've always loved the Boathouse and the Great American Pub in Conshohocken, but I haven't been out in so long. I got young kids.
Yeah, it's
too hard to get out with young kids.
Yeah, especially to a bar. Although some of the breweries are pretty kid friendly, depending on what age of kid. They have stuff for them to do. More warmer weather.
We did our holiday party over at I think the Conchi Brewery in Bridgeport. I thought they did a great job there.
Yeah, they're great. Good owners too. All right, and then a local business shout out.
I already shouted out the Ale House. I think that we checked that box.
Yeah, Ale House is great. I think I'm gonna go with Well Crafted Brewery and Ambler, and that's because I love the trivia night there. Anthony, he's a great host, and he draws a good crowd of people. So if you want to meet new people in the area,
check it out.
Yeah, they're a lot of fun. Thursday nights, which means I can't make it all the time because it's a little popular for our industry.
Yeah, Thursday's a big night.
It is, yeah, right before the long weekend. But yeah, I appreciate it. Thank you for being on this, Corey. Final thoughts on the market? Any advice for buyers right now who are on the fence?
I think that if you are contemplating buying a house, the best time is in the past, and the next best time is right now.
That's a great way to say that. And I would wholeheartedly agree. And how can anyone connect with you, Corey?
Yeah, my email address, corey.gee@ccm.com. You can always reach me via email, or you can call or text me. My office line 61.
Awesome. Thank you, Corey. And, anyone listening, give us a shout out to your favorite pizza place. Let's have Corey try out some new places in the area. So comment your favorite pizza place.
I'll be busy.
Yeah.
Let's check them all out.
Let's check them all out. All right.
Yeah.
Thank you so much, Corey, for joining me.
My pleasure. Thank you, Shaina.
Thanks. Bye.
Bye, everybody.